Hello, good morning and welcome. You're watching The Mining Show, brought to you by Blytheway on Core Finance. I'm Charlie Gibson. As you know, we always look for companies whose share price has gone up well as much as possible in the shortest possible time. One of those definite candidates, the shares were a penny halfpenny last Christmas, and they are this morning around 9p halfpenny, and that share is Bushveld Minerals. And joining me is the Chief Executive, Fortune Mojapelo. Fortune, thank you very much indeed for joining us. I remember last time we spoke, we spoke exclusively about your vanadium assets, and we said you must come back and talk about the coal assets and the tin assets. But actually, I mean, you look at vanadium, and I know you've had an operational update out on Vametco, which you took over earlier this year. And the other thing I know, the vanadium price has been going gangbusters. I mean, the chart is practically vertical. It was what? It was $6.50 a pound, not a couple of months ago. And now all of a sudden it's about 9.5, isn't it? So I suppose your share price is moving to some extent with the vanadium price. But that aside, just let's go back. Let's talk about the operational update, because it's your first operational update, isn't it, since you took over Vametco? And just tell us the bare bones. What did it say?
No, thanks for having me, by the way. I think the first point I would make is just clarify that you recall that Bushveld Minerals has a 45% interest in Bushveld Vametco Limited, which is the entity that has taken over Vametco Alloys. And we have a partner in that, in Yellow Dragon Holdings, that we've done this transaction with. And last week, what we really put out was, the operational update for Vametco, and the point of it being to put the numbers out there, so kind of people can start at least to appreciate, what the implications of having a producing asset like a Vametco means for the Bushveld value. We can talk more on effect base rather than speculating. Pleased that the numbers look very good. The vanadium price, as you correctly mentioned, is having a fairly good run. I like to point people back to January 2016 when the prices were about $13.50 per kgV. And at the time we put out a chart and in our presentation where we made the statement that we saw the market being in a structural deficit. I think we were among the first parties to come out, putting that kind of statement out. And that we didn't see prices continuing at the kind of levels that they were at. And that's why we're emboldened even to proceed with the transaction, even at a time when the prices were where they were. I'm pleased to see that we've been vindicated in many respects, and I think that good times are still ahead.
I mean, one might say you called the cycle almost perfectly. I suppose from an operational perspective, I mean, what I saw is the thing that Vametco is still continuing to operate smoothly. It was an operating asset before you bought it, and it's operating in very much the same way. Production is fairly smooth. It's at steady state compared to the same period last year, and actually the same period the year before that. Although you notice that EBITDA is compared to 2 years ago is up a lot. I saw it was 15 million rand in the whole of 2015, and in the first 6 months of this year is up to 85.5. So I suppose you're seeing to some extent the early stages of that operational gearing to the vanadium price?
Yeah, absolutely. The Vametco is a low-cost producer, always has been actually a low-cost producer. And it's got a fantastic management team who have plenty of experience in the vanadium industry, have worked on pretty much every vanadium, primary vanadium plant in South Africa. So, for me, I have a lot of confidence in what they do. What happened in 2015 was really just the fact that the prices were as low as they were, and it affected every vanadium producer around the world. Vametco was one of them affected, but even then, you saw that it still was able to generate a modest profit during that time. What has happened since then was an increase in the production volumes from about 2,400 to 2,800 MTV last year, a further improvement in the production cost base, and that shows itself in significant improvements through 2016. Between 2016 and 2017, what we have seen is really largely the impact of the vanadium price correction.
And then I see that you have plans. You said that the production, I think, capacity is about 3,000, and you're producing about 2,800 on a run rate at the moment, but you have plans to take that to 5,000, I see.
Yes, we've already started in terms of work to increase the production rate. We do think that a plant like Vametco should be operating at about 5,000 MTV. That work is started, and we're moving fairly aggressively to try and get that done.
Is that a big capex bill? Have you begun to scope up the sort of, how much capex for all that extra production?
I mean, there is a capex spend involved, the numbers of which, we haven't made public yet. In due time, we will do that. But again, when you've got an operation that doesn't really have an external debt, which is generating cash, you're able to leverage, the cash generation capacity of the operations to fund this kind of expansion. And why you want to do that, if I may just also just highlight here, it's not just about maximizing profits in a high price environment. I think it's more about, in my mind, taking advantage of the environment we're in to drive the operating cost base of Vametco even further down. Right. You want to make sure that if prices ever return back to the $13 levels at some point, and I'm not saying I'm expecting them to, there's a lot of reasons to expect that not to happen.
But you hope for the
but
best,
you want to make sure that you've got a very solid operating base. Any miner, anybody in the mining game, in my view, your best placing is always to be the lowest cost producer, and then you hope for the best price possible.
Excellent. One of the things that arguably investors might say commodity, and I'm not talking generally here, but commodity producers sometimes get wrong is they sometimes increase production into a market that can't maintain that. We can look back at many commodities where that has seemingly happened. But you're confident in your analysis of the vanadium market that it can support an extra couple of thousand tons a year?
Well, two things. Vanadium is in a structural deficit right now. The demand profile of vanadium is very solid. The steel industry continues to be a robust support for demand. We are fairly bullish about the prospects of vanadium in the energy storage market, which will further add to the demand profile. And there's quite a lot we're doing in that space, which we think will unlock that opportunity for vanadium in the energy storage space. So demand is really robust. On the supply side, however, concentrated, constrained. If anything, in the last 2 years, we've seen a reduction in supply, and a significant one at that. So you have to say to yourself, what are the supply prospects going forward? And we see this deficit sustaining for some years to come still. We think that, any new supply will need a sustained period of higher vanadium prices to be able to justify the capex investments in new supply. So we're confident that increasing production or increasing supply from players like primary producers like Vametco is the right thing to do. I don't believe that it is going to close out that deficit. Personally, I do think that we're still going to have that deficit for years to come.
So is it the traditional applications of vanadium in the steel industry? Is that what has driven the price up so far, or are you seeing the effect of energy storage already coming in on the demand side to push the price up?
The biggest driver of vanadium, of the deficit I've talked about, is more on the supply side. I think energy storage applications of vanadium, there is momentum behind. It's still early days. It is picking up, and we do think that the future is really good for vanadium in the energy storage market, but we're not there yet. What has really happened in the last 2 years is on the supply side, and that's been the biggest driver of vanadium prices.
Now, of course, I always say this, don't I, that we're going to talk about your other assets, and we always end up talking about vanadium, for which I apologise.
For good reason, yeah.
But go on, the two other assets that I want to talk to you about are tin and coal. So why don't you tell us, kick off with tin, why don't you tell us what's going on in your tin division?
Yeah, I mean, look, we like tin. We think, like vanadium, it's also a commodity whose market fundamentals are pretty good. And we have a good set of assets in the group, and our strategy has always been to build up a critical mass of resource inventory and get it to a point where Green Hills as a tin platform can stand on its own feet. Having acquired a stake in the Namibian asset, which is a mining license, which is a large resource space for tin, open pit, coarse grained, which means that it can be processed very cheaply and with very good recoveries. It is a really good story, spanning not only one country, South Africa, but South Africa and Namibia. So it is, our intention is, to fulfill our pledge, which is to, set Greenhouse on a path to call it to existing on its own 2 feet. What exactly that looks like is a work in progress. We will obviously update the market in due course. But I'm excited about the prospects of having an African tin champion, which can drive the consolidation of tin assets on the continent.
And do you have any idea what the timeline might be on that?
Yes.
In the broadest possible sense.
I do, and the reason I pause is I have to be careful what I can say and what I cannot say, but suffice to say that we will have much greater clarity within the course of this year still.
Excellent. All right. Well, we'll look forward to that very much. Quickly on your coal asset.
The coal, again, catalyst for that is the IPP license. It converts the project from being just a coal mining project with an asset which can be deemed stranded, given the relative lack of infrastructure for taking the coal out of Madagascar. But when you put a power station there, you create a captive market for the deposit, in addition to obviously increasing the size of the project itself. So the focus there has been getting the PPA with the Malagasy government, done quite a lot of work in that space, and we will update the market in due course. But I'm very optimistic that we'll get that sorted out soon. Once you've got that, then the partnership we have with China Power, particularly, comes in handy in terms of the feasibility study for the power project. You've got a very nice project there, which we believe that we'll be able to crystallize that value for our shareholders. Again, how we make sure that that value is reflected within the Bushveld, share for our shareholders. It's the next step of work that we are doing in terms of making sure that we can crystallize the value and help our shareholders realize that value as well.
Excellent. All right, Fortune, I'm afraid that's all we've got time for, but thank you very much indeed. Ladies and gentlemen, that was Fortune Mojapelo, the Chief Executive Officer of Bushveld Minerals. As I say, that's all we've got time for, but keep an eye on them. Their share price up from 1.5 penny last Christmas to 9p halfpenny, and you can't say better or fairer than that. I'm afraid that's all we've got time for, but join us again next week when we'll be having more investment opportunities in the mining space. I'm Charlie Gibson. You've been watching The Mining Show, brought to you by Blytheway on Core Finance, and until then, you have a capital day.